Hi, this is Lara at Elliott Wave Gold with an extra video update for you after the session dated Tuesday 13th of December has closed. I was expecting some upward movement for the short term. That's not quite what happened. Prices essentially moved sideways to complete an inside day. It's remained above the invalidation point. I'm still expecting overall some upward movement, either now for 2 days or 7 days, to a target at 1187, and that may complete a small consolidation. When that's done and resolved oversold conditions, then price may again be ready to fall. Let's have a look at the main wave count at the daily chart level. It sees a big trend change here at cycle degree and gold in a new cycle degree wave down for a big C wave. So to look at the bigger picture, you'll have to see historic analysis there to see how this all fits. Elliott wave is fractal. The target for intermediate wave 3 remains the same at this stage at 1095. It would reach 4.236, the length of intermediate wave 1. The only problem I have with this wave count at the daily chart level, well, two problems actually, but the biggest problem, the Elliott wave problem, is the proportion of minute wave 2. It's grossly disproportionate to minor wave 2, 1 degree higher, and intermediate wave 2, 2 degrees higher. Minute wave 2 should be more brief, not more time consuming. That does give this part of the wave count an odd look. Gold's proportions are usually very good, but not always, and so technically this does still fit. If cycle C has begun here, then we don't have a 5 down complete for primary wave 1. Cycle C has to be a 5 wave structure, and we're still within the first wave of it. So far we may have 1 2 1 2 1 2, and now 3 4 moving into 3 and moving into a fourth wave correction counterpart to the second wave. When that's done, a fifth wave down to end intermediate 3, and then another correction for intermediate wave 4. In coming weeks, I might have to move the degree of labelling of all of this up 1 degree. My target at the weekly chart level, I have 2 targets. If we get to the first target and the structure looks complete, then we could have primary 1, 2 and primary 3 may end about 1095. Cycle C could come to a more swift conclusion, but we need to wait and see how the structure unfolds first. This trend line is copied over from the monthly chart, and it's providing pretty strong support to price, and we're seeing some consolidation about here. I expect the consolidation is incomplete. Minor wave 2 was a relatively deep zigzag, so given the guideline of alternation, I'm expecting minor wave 4 to be a more shallow flat combination or triangle. Let's have a look at how this is unfolding at the hourly chart level. We minute wave A, this little piece of movement up here, fits as a zigzag and ends here, and minute wave B fits as a double zigzag very neatly and ends down here. If this is correct, then minute wave C will reach 1187, it'll reach 1.618, the length of minute wave A. Now it's most likely, I expect about 50% likely, that minor 4 is going to complete as an expanded flat correction, and that's how I'm labelling it as my first idea. But it's impossible still to eliminate the other options of a running triangle or a combination, because it could still be a combination. We could have a zigzag up here for minute W, a double zigzag down here for minute X. We could be looking at a flat correction for minute wave Y. If it's a combination, it'll be indicated with an invalidation below 1151.96. As minor wave 4 continues further sideways, I do have to be flexible and allow for the possibility that it's not an expanded flat. It could be a combination or triangle. It is possible that we could see an invalidation of this hourly wave count, and minor 4 could turn out to be a combination. We'd have a zigzag, X, and then a flat correction subdividing 3, 3, 5, moving essentially sideways in a reasonably narrow range. I don't think that's very likely though, because I think this little piece of upward movement looks best and fits best as a 5 wave structure, and this downward movement's very choppy and overlapping. This looks corrective, so I think we probably are going to see overall upward movement for a C wave to complete as a 5 wave structure, and so far we've got 1, a deep zigzag for 2, now we need an impulse up for 3, then we'll have 4 and 5. Now, if minute wave C lasts another, I think 7 sessions, then minor wave 4 in its entirety may complete in a Fibonacci 13 sessions in total. If minute wave C completes more quickly in only 2 sessions, then minor 4 may total a Fibonacci 8. So those are the 2 possibilities I'll be looking at for this target. At 1176, minuet wave 3, if it's begun here, would reach 1.618, the length of minuet wave 1. Let's have a look at the alternate at the daily chart level. What if the upward wave here could be a zigzag and it's not the completion of cycle wave B? What if it's only the completion of a single zigzag and a double, or a first wave impulse, because it can be also seen as a 5-wave structure, although I don't like the look of it. It's a first wave possibly of an unfolding impulse upward. In other words, what if gold is still in a bull market? This is technically possible. We need to consider all possibilities. If that's the case, then this downward movement fits reasonably well as a double zigzag. 5, 3, 5, the first zigzag in the double is joined by a 3 in the opposite direction labelled X, and 5, 3, 5, second zigzag in the double is incomplete. At 1106, minor wave C would reach equality in length with minor wave A, so that's the target for this downward movement to end. Let's have a look at how this fits at the hourly chart level with minute wave 4, is this piece up here. The problem now at the hourly chart level, well, there's a few problems. There's so much overlapping within this downward movement from this high to this low. I can't see minute wave 5 a complete structure. I can't see the third wave within it complete, and all of the following fourth wave corrections complete and remaining below first wave price territory. So far we could have sub-minuet 4 over here. It's remained below sub-minuet 1 price territory. So we need to see minuet 3 complete and then minuet 4 complete and remain below its first wave price territory. So far within minute 5, which may be unfolding as an impulse, we could have 1, 2, 1, 2, 1, 2, 1, 2, and now 3, 4, 3, 4, 3, 4. We need the final fifth wave down to complete. We've got the same problem again today. Overlapping first and second waves, now 3 of them. And so we need to move through the middle of a third wave and then see some corresponding fourth waves that have to remain below each of their first wave price territories. In other words, this wave count expects to see an increase in downward momentum again, which should also have support from volume. We're not seeing that. This wave count does not have support from classic technical analysis. It's provided as a what if. We always should consider all possibilities. What if that main wave count is wrong? What if gold does make new lows? This would be the target that we should use. Within sub-minuet 5, no second wave correction can move beyond the start of its first wave above 1165.18. The other problem now is the channel I had drawn yesterday around this piece of downward movement has been clearly breached by this piece of movement. It's not fitting very well at all within a channel, and toward the end of a third wave, we shouldn't be seeing this hesitancy. Gold usually finishes its third waves quite strongly. That's where we see blow-off tops and capitulation spikes to the downside. The fifth waves for gold to end its third waves are usually swift, strong extensions. That's just not what is happening at this stage. I do not have a lot of confidence at all in this wave count. At the weekly chart level, I've gone over this in last technical analysis. Suffice to say that we've got a few weeks of falling price coming on declining volume. This supports the main Elliott wave count. The fall in price is not supported by volume. This market has been falling of its own weight, so it is suspicious. We should be expecting either a trend change or some consolidation. We had a bearish signal here from on-balance volume at the weekly chart level. That doesn't tell us how far down price is going to continue, though. We certainly could see on balance volume turn up from here. If it does, I'll expect some resistance here. At the daily chart level, we've got now triple bullish divergence, 1, 2, 3, 1, 2, 3 between price and RSI is oversold. When that happens and we're seeing some weakness, we should expect, or it's very reasonable to expect, either a reasonable time consuming consolidation lasting at least a week or so, or We could also be expecting a trend change. This weakness doesn't tell us which one of those two situations price is going to move into. We need to watch volume carefully and other indicators carefully for that. As price has been falling here, it's been coming with declining volume. So the fall in price is not supported by volume. The bears are looking weak and tired. On balance volume for gold is still constrained. I've got a resistance line in purple and a support line in yellow. If we see a break above resistance, that would be a reasonable bullish signal now. Reasonable because this line has been tested a few times, but it does still have a reasonable slope, so this would not be a strong bullish signal. And sometimes on balance volume can break above or below trend lines only to return back. Today, on balance volume is essentially moving right along this purple line. Price managed to move down with the lower edge of Bollinger Bands for a few days, and now it's moving, it's still lower, but now it's starting to slow down its downward movement, and I expect in a few days it may possibly end the consolidation if it comes up to sit around the midline of Bollinger Bands. So I'll expect some resistance at the midline of Bollinger Bands, if not first initially at the 13-day moving average. I always use Fibonacci numbers for my moving averages apart from the 200-day. ADX is still increasing, telling us the market is still trending and the trend is down. It's not yet extreme, it's not above 35, but ATR is clearly declining and Bollinger Bands are clearly contracting. So if we are still in a downward trend, as price is still mostly trending down, the trend does look weak and it does look tight. Again, very reasonable to expect some consolidation about here. Stochastics also has a longer term and shorter term divergence with price at recent lows. And again, that tells us that the bears are weak, expect some consolidation or possibly a trend change. The larger trend for gold may be rolling over now. The 200-day moving average is now pointing down a little bit, not a lot, a little bit, but it is now rolling over. The mid-term Fibonacci 55-day moving average is clearly pointing down and is below the 200-day average, and the short-term 13-day moving average is still pointing down and is below the other two. So the trend short, mid and long-term is still indicated as down. Let's have a quick look at GDX. We've still got this bear flag pattern, but I've got a little warning today that we might not be going to get a downward breakout out of that pattern because on balance volume has broken above its resistance line. Now this line doesn't have too great a slope. It's been tested 3 times, possibly 4 or 5 before, and this is now a reasonably clear break above resistance. That could be telling us that we might be about to see an upward breakout from the flag pattern. So I've had a look, because I haven't been doing classic technical analysis of GDX for a very long time on a daily basis. This is only recent. I've had a look at recent behaviour from DDX and I'm noticing a couple of things. If we got a downward breakout here, if we took that as a signal of what price was going to do out of this consolidation, that would have been a pretty good signal. We would have had this downward breakout here. We had this little triangle pattern and we have a downward breakout from it. If we took this upward breakout signal here from on balance volume for GDX, that wouldn't have been so reliable. Price did move up, but it was still essentially consolidating. I would expect that this is still a flag pattern within a bigger downward trend. So the upward breakout would have told us the flag pattern still had higher highs to go, but it was against the larger trend. So I'm a little bit cautious about this possible upward breakout here from GDX. If we're going to have confidence in that idea that the next movement for price is upward, we really do need to see a break above this resistance line from price, and for an upward breakout it absolutely must come on a day, an upward day with a good strong increase in volume to have support for the upward movement in price. If that happens, then I will expect that the next move for GDX is up. But flag patterns are usually reliable continuation patterns. In the text article I've given you a target, I think it's about 13 something, for a downward breakout from this flag pattern using the measure rule. Here's the start of the flagpole, the end of the flagpole from the breakout point, which is about 20.15. GDX is moving sideways, it's consolidating, it's constrained by resistance above here and support below here. While it's moving sideways, overall volume is still moving lower. That's all from me at the end of the trading session for your gold and GDX analysis, and I hope that all of our members are having a most fabulous day.